have with us the CEO and MD, Shishir Joshipura, joining in on the show right now. Shishir, hi, good morning. Good to have you on ET Now. Thank you so much for taking your time out. Shishir, before we address your earnings, I'd like to first talk about, this suspension of rice supply for ethanol. Is there any implication for you at Praj?
Well, we have been speaking to our customers, and the way the rice for ethanol is used is that customers source it both from open market, and a few customers do source it from FCI. So this order will definitely mean that they have to rearrange their supply chains, and I think that could mean a very short-term temporary blip in their plans to start their productions or run their on-running plants. So we do expect that there'll be some very short-term impact, but as supply chains realign themselves in the new rice season, life will become normal again.
Okay. Let me now come to earnings then. Although your order intake has risen and your order book position has strengthened sequentially, the revenues booked have seen a dip, also below what the street was anticipating as well. Why this mismatch in execution?
Well, actually, what happens in a project nature of business is that sometimes the order inflow may have a differentiated delivery cycles from the customers and given their own project compulsions, and that's what we saw in this quarter. And as we go through the year also, we are seeing our order book execution that the second half is going to be far more loaded compared to the first half. So we are not taken by any surprise. The important dimension for us was two things. One, are we able to grow our order book, which we have done? And the second was, are we able to manage our margins? And that too we have done. So those are the two key parameters for us. If we had slipped on that, then I would be worried. This is just a time shift, not even a shift, it's just a time, what I said, prioritization of the project that has resulted into this lower revenue this quarter.
Sure, relief to hear that. So could you put some numbers into that? I mean, how much revenue growth can we expect for the rest of the year? Because last year was about 3,000 crores. You think a 4,000 crore rupee figure is achievable?
Well, while I may not be able to give you an exact number, sure, owing to our company policy, we are confident that we are remaining on our growth path and we are not concerned about it.
There seems to be a sudden change by the government in terms of what ethanol producers would do in terms of the supply of rice. I'm talking about the grain-based, companies here. When policies of like this and ad hoc policy changes are done, do you think this, in a sense, could have an impact on the ethanol industry? It will have indirect impact on a company like Praj?
Well, let's look at it like this. The government is fully committed to the EBP20 program, and there is absolutely no taking back from that. The ethanol production in the country comes from different feedstocks. Sugary feedstocks, starchy feedstock. Within starchy, there is spoiled rice, spoiled grain, broken rice, and full rice, and maize. So the full rice, which is the FCI, and within full rice, again, some comes from FCI and a majority comes from open market. So a very small fraction of the overall supply chain needs to get realigned itself. So I don't think there is any, step back in terms of either the program or the requirement or the demand of ethanol as we go forward. We strongly believe that the government is fully committed to BP20 and the industry is gearing up to supply to that volume.
I am looking at a very important matrix which shareholders always look at, analysts always look at, ROCE. In March 2020, it was 11. In March 2023, it was 31. There is a huge improvement in your ROCE. Given the volatility in the order book where you're confident of making a comeback, what happens to your ROE, your ROS trajectory?
I think we are very confident that we'll continue to perform on the key metrics of business performance. We have also talked about the fact that as we move through, and I'm not talking one quarter, as we move through, let us say the next 6 or 8 quarters, we will see an increasing share of business coming from our export business, an increasing share of business coming from energy transition and climate action programs. So we will see a change in the nature of our order book, all in the positively accruing side of the margins, on the margin side, and therefore we are very, very confident and very excitedly looking forward to a future that we are trying to build here.
You have, time and again reinvented the technology, and I'm talking about, let's say, from grain to other new platforms which you just mentioned, even in terms of climate, a product category, a category in which you, in a sense, have come up with some innovations. How much the new business category will be the percentage contributor for Praj's top line and bottom line in 3 years from now?
Well, the way we are looking at it is like this. We clearly see, we know that EBP20 program will have to then see other policy initiatives unfold. For example, do we go to E27 the way Brazil has gone? Is there a diesel blending program coming forth? There's flex fuel vehicles on the anvil. There is ethanol-based chemicals. So there are a whole host of avenues that are likely to open up in near future. We also see that it's not going to be only an ethanol story. It's also going to be, we are going to see a clear forward advent of CBG, as we call it in India, or RNG worldwide. We will see SAF walking in a 2 to 3 years time period. So there is going to be multiple avenues of growth that will open up. It's no longer just single feedstock, single output kind of a market for or a canvas for us. We have multiple feedstocks and we have multiple outputs. And as you rightly said, we are focused on developing our technological solutions for all these fields as we move forward.
So last 3 years have been great for Praj. Next 3 years, will they be equally exciting or there could be a base effect?
Well, that's what we are working on to keep the story exciting and equally challenging and running. Time will tell whether we are successful or not, but that's the attempt of the team.
Which we look at a macro level is the capacity utilization for the industry. And if the capacity utilization numbers, they reach 75 to 80%, that's the time corporate India, they start capex again. In your understanding, in the clients whom you interact with, what is the capacity utilization numbers they have? Because that would be a lead indicator for all of us to understand that how your future order book will move.
Well, if you look at it, the way we have seen this industry operate, because there's some seasonality factor also in the ethanol, especially in the ethanol production. So in that particular segment, we have seen that on an average, the country, if you look at a country basis, we are looking at a 60-65% of the capacity utilization that takes place and the capacity starts to get built. As I was mentioning to you, there are different levers that are going to drive our business forward. Energy transition and climate action is one very big unfolding canvas story around green hydrogen, green ammonia, the LNG space. We are going to see a whole host of opportunities that will open up there. So as I was mentioning to you, we should not just worry about one dimension of ethanol, which of course is a very good story building and will continue to build on different dimensions. But also the other dimensions will walk in, especially from companies that are located outside India.
You know, the other thing I also wanted to understand, Shishir, is that 35% of your order intake was actually from the export market. Tell me how the export environment has been and whether this 35 actually can scale up higher.
Well, this is precisely the point I was trying to make, that if you look at, say, the previous 4 quarters, this number would be hovering at about 18-20%. And we have seen a shift now taking place in terms of it moving up to 35%. And as I was mentioning, on a yearly basis, we are clearly seeing a shift in favor of increasing share of international business in our overall pie. And that is coming from this whole phenomenon of ETCA, as I was mentioning. And we can see a very healthy pipeline build-up. The low carbon ethanol opportunity in several markets like United States and Brazil, in Europe, we clearly see that ethanol, ETCA will become 2 big drivers for our business, for our international business.
So how are you planning to utilize your free cash flow? What you're telling me is your business does not drain too much of cash. It throws up a lot of cash. If you are looking at this kind of a strong growth, the FCF, which is free cash flow generation, I'm assuming it will increase. What is the plan for that? Buyback, dividend?
Well, whether buyback or dividend is a matter for the board to discuss and decide. So that's not for me to comment. But what is important to understand is that in our business, as you were mentioning earlier, we need to continuously invest into technology development. We need to make sure that we have the capacity to serve our customers. We've just announced a very big CapEx plan last quarter. So we'll have to see a judicious utilization of our cash. And I'm sure the board will take a wise decision on what to do if we do have additional cash flow. And that's how we intend to continue to operate as well.
I want to go back to that whole, debate of return on equity ROS. From 12-13% to 30%. I mean, that is a fantastic number. And this 30% number, I think, is way above your long-term average. Your long-term average is in mid-teens and early 20s. Eventually, where do you think a return on ROS will actually settle?
Well, I do not know whether I can give you a precise number on where to settle, but what we have done is that as we leveraged the high volume growth that we have witnessed over the last 2 years, as you mentioned, we also created a strategy to how we will serve our customers, because eventually we have to deliver our solutions in form of equipments and plants and systems. And how do we go about making sure that we whatever capital we have deployed is used most efficiently. And the model that we have worked out for execution was with this thought process in mind, where it was possible for us to do a lower capital employment and leverage it to a very, very large extent. In our ETCA business, where what I was mentioning to earlier, we may not have that much of freedom available. We'll have to invest, and that's what we announced, 100 crore investment into a new facility in Mangalore. That's where we have to put that money and then ensure the return. Also, we have worked very diligently on ensuring that our capital usage becomes very, very efficient through tightening of our operations.
I was hoping for a slightly direct answer. All I'm trying to understand is that there is a volatility in your return on equity, a number which shareholders look at, ROCE, return ROS has been volatile. 18% in March 2012, as low as 6% in March 2018, as high as 31% in March 2023. What would be the long-term average at will it will settle in next 2-3 years? It's a simple, straightforward question.
Well, in 2-3 years, I would expect it to be range bound to what we currently are.
Current level is 20 plus.
Definitely, yes.
Okay. So you expect your return on equity, ROC, to stay between 20 to 25% for next 2-3 years.
That's it.
Okay. Appreciate your time. You've been very candid, you've been very frank, and you've been very honest in fielding all our questions. Hope to see much more of you going forward. And thank you for joining us.
Thank you very much.